Did you know the wrong type of life insurance premium could cost you tens of thousands of dollars over the life of your policy? Most Australians don't even realize they're making this mistake. In fact, I recently helped a client save $23,000 by choosing the right premium structure. Today, I'll break down the difference between stepped and level premiums and show you how you can make the smarter choice for your wallet and your family, of course. I have worked with hundreds of Australians to save on life insurance. Here's what real people have saved. Sarah, aged 34, from Melbourne, saved $19,000 by switching to level premiums. John, 41 years of age, from Brisbane, cut his long-term costs by $28,000 by paying annually. And one family in Sydney saved over $46,000 on a 30-year-old policy. These are not small amounts of money to save, so stick around to find out how you can do the same. Here's the problem. When you shop for life insurance, you're asked stepped or level premiums. Most people pick the cheaper option, obviously, without understanding the long-term costs. That mistake could cost you thousands over time. Let's break it down and understand it better. Let's go with stepped premiums first. These are like a step, so they kind of increase every year like a step ladder. They start out cheaper but increase every year as you age. Think of it like a variable home loan rate. It can seem great in the beginning, but it can get expensive very fast. Level premiums, on the other hand, they stay consistent over the life of your policy. Of course, while they are more expensive at first, they are like a fixed rate home loan, predictable and sustainable over time. Let's look at a real life example. Meet Sarah, a 35-year-old non-smoker from Melbourne who wanted $500,000 in life cover. With stepped premiums, Sarah started paying $420 annually, and with level premiums, she would have paid $800 annually. She initially chose the stepped premiums, obviously because they were cheaper, but by the age of 65, her annual payments had jumped to $3,600 annually. Over 30 years, Sarah would have spent $72,000 on stepped premiums. When she switched to level premiums, her total cost over the same period dropped to just $24,000, saving her $48,000 in premiums. So which one is right for you? Of course, it depends on your personal circumstances and your preferences, but generally speaking, stepped premiums are better if you're young, you're healthy, and you only need cover for a short period, say like 10 years. Think of it as a quick, affordable solution. Level premiums, on the other hand, are better if you're thinking to keep the policy long-term, say a 30-year period or a 25, 30, 40-year period. The upfront cost surely is higher, but you save big in the long run. Here's a pro tip. If you're unsure about your future needs, some insurers let you start with stepped premiums and switch to level later. It's called optimum premiums or hybrid premiums. So find out about that as well. Want to save even more? Here are 3 proven strategies. The first one, pay annually instead of monthly. John from Brisbane switched to annual payments and saved almost 8% on his premiums. That's almost $2,800 over 10 years. Tailor your coverage. Don't over-insure. If your mortgage is nearly paid off or your kids are grown up, you might not even need as much cover. Shop around if you're healthy. Insurers reward good health. Quitting smoking or improving your BMI could save you thousands over time. Now, let's talk about what happens when you jump onto a site like Compare the Market or Compare Club, etc. You'll get quotes for stepped and level premiums, but here's the catch. Most people pick the cheapest option, which is stepped premiums, without understanding how quickly the costs rise. These sites rarely show the long-term numbers, so you don't see how much more stepped premiums will cost over time. This is why it is so important to take a step back, compare both the options, and think about your future needs. So, let's summarize and the action items. Here's what you need to do next. Step 1. Review your policy. If you already have insurance, please check if you're on step premiums or level premium. The second point, obviously, do the math. Calculate the total cost over the life of a policy. Use a 10-year, 20-year or 30-year-old 30-year projection to see what you're really paying. You could easily get this from your insurer, or you could ask your professional you've dealt with. Or if you don't have a professional, the third point is, and the third one, of course, consult a professional if you don't have one. Don't leave it to chance. An insurance expert can help you compare your options and find the best deal available. Making the right choice between step and level premiums could save you tens of thousands of dollars and of course ensure your family is protected. If you want to find out how much you could save, book a free consultation with me today. And if you found this video helpful, hit like, subscribe and share it with someone who might benefit. Thanks for watching, and I'll see you in the next one.